Alright, here's video number 2 over chapter number 2. We are picking up where we left off, and we're going to talk first about government-wide statements. So, you may recall what we were talking about, or how we do this entire set. Some are government-wide, and some are by funds, right? So, think of the government-wide statements as the consolidated statements. It's where you take all the funds and kind of consolidate them up into a whole government-wide statement. Not all the funds. We'll get to that in a little bit. You don't really include the fiduciary funds, the stuff held in trust, in the government-wide because, well, it doesn't belong to the government. It belongs to like the pensioners or whoever it belongs to. So the government-wide statements is where you consolidate stuff. One is the statement of net positions, and I kind of think of that like a balance sheet. It's not, because if you think about it, there's no equity, right? It's a government. It just belongs to everybody. And if you take assets minus liabilities, it's not like there's somebody who owns that, but there is a net position. So like assets net of their associated debt, right? So you can imagine if you had, well, let's say a building, and you issued some bonds, the city issued some bonds to build the building. You take, okay, building, less depreciation, less the debt for that building, there's your net position, right? So you have the statement of net positions, kind of like a balance sheet. Then you have the statement of activities, right? So what stuff have we done? What revenues came in, right? What taxes, what fees did we collect? What grants did we receive? And what expenditures did we have? What did we pay out, right? So we don't really end up with net income, because it's not about profits. It's just we got some money in, we paid some money out, and that's what happened, right? Okay. So also on a typical set of financial statements, you will recall there's multiple years. GAAP requires comparative financial statements so I can compare prior years. You don't have to, but a lot of cities and states do show 2 years, something like that. And certainly out in the statistical section, they might show as many as 10. All right. The government-wide does not have a cash flow statement. So a complete set of government-wide statements would just be these two, the net position and statement of activities. So there's no separate statement of cash flows for government-wide. There are some cash flow statements that you prepare for funds, right? Proprietary funds, if you think about it, yeah, they have cash flow. Like the water department has revenues, has expenses, cash flow, but not government-wide. All right, and when you prepare your government-wide, when you're consolidating all those funds up into the total government, you don't include the fiduciary funds, right? So those fiduciary funds, those things held in trust, right? Like I always think of pensions because that's the main thing, right? So I paid in my pension to teacher retirement, and then the universities paid in some to teacher retirement, and that's set aside for me. The government can't use that to then go ahead and build a bridge or something, right? That's in trust, held aside. It can only be used for that. So of course they don't consolidate that into the government-wide statement, because technically my retirement belongs to me, not the government. They just are holding it in trust for me. I'm trusting them to use it for me. All right, so let's look at this first one. If you're following along in your book, that would be great. There's an example from the city of Salem in there. So the first thing is the government-wide statement of net position, all right? And so this, of course, has your assets and liabilities, right? So like a balance sheet, but again, the difference is that you're not reporting out what's called equity, you're reporting out what's called net position. So you take your assets minus your liabilities, and that leaves you with a net position. Also, there's 3 categories of net position. So when you're doing your assets minus liabilities, you have to subtract those liabilities from the proper category, right? So you're categorizing your net position in terms of capital assets, restricted, and unrestricted. So I think we talked a little bit last chapter about the fact that Sometimes cities get what are called restricted assets, and they can only be used for certain things. Like, it's easy to imagine somebody donated a building to the city of Kingsville to be used for a library, so they can only use that for that, and they donated a fund to use to buy books and pay a librarian, and it can only be used for that. So those are restricted funds. You can imagine the government gives the city a grant to build a bridge, right? Restricted funds. And then unrestricted can be used for anything. So you've got capital assets, right? Like City Hall is a building, it's a capital asset. The garbage trucks, that's a capital asset. So you got that net investment in them minus depreciation minus your liabilities. There's your net position of capital assets. Restricted, right? The funds, the assets, minus anything that needs to be, minus any liabilities associated with them, and then same thing with unrestricted. All right, so government-wide statement of net position. So you're going to have some columns on these financial statements. You may have looked, and you may be used to looking at a balance sheet and seeing like this year, last year, year before, and there'll be columns. Well, these columns aren't necessarily for years, right? These columns are for different activities, right? So you have governmental activities, which are the general governmental activities, and business activities. So think of those as the part of the government that runs like a business. So you might have the water department, electric department. Depends on maybe the library, maybe not the library. It just depends, do they take in some money? It could be they run some apartments, some Section 8 housing is maybe run by the city, so they collect rent, pay expenses. So there's some business activities, and you're going to have separate columns for just the general governmental and those things that you can classify similar to a business. Then if there are something called a component unit, right, it's totally separate, like maybe a library. We talked about this before, component units. Then they'll have their own columns, or maybe if there's a few small component units, there'll just be one column for all those component units, right? All right. If they have multiple component units, you can have more than one. You can have a column for each unit, or you might combine them all. So if you were to go look at the state of Texas, you might see that we have the universities are separate units, but they're all combined into systems, and the systems are combined into a column that says colleges and universities. So when they do this combining, when they take components and combine them all into one column like that, colleges and universities, at the end of the financial statements, there'll also be what's called a combining statement. So if you get out that Texas financial statement that's in Blackboard and go to the very end of it, you would be able to see the separate university systems and their financial information and how they combine it. So you can see those condensed financial statements. All right. Then there's another, this government-wide statement of activity. So it's not really an income statement. I don't even think of it that way. But it does show a change in net position. So if you look at that example in the book, you'll see first they have the expenses. It's kind of weird, right? You think of an income statement, revenues minus expenses equals net income. Not what's going on here. Starts out with the expenses. How much did it cost to run this aspect of the government? How much did it cost to run this aspect? So you got all the costs for running the government in that first column. Then you've got, here's what we collected in taxes for that part of the government. Here's what we collected in fees for that part of the government. Here's what we got in a grant for that, right? So all the, you could call them revenues, although that's not really what they are. They're just revenues, money that came in. And then you'll get a change in the net position at the end, right? So it's kind of like this total, and it's certainly not net income, but it's certainly a change in their net position, right? And so that's what they call it, a change in net position. And they take that statement of activities and reconcile it back to that first financial statement, the statement of net position. So you can see how, kind of like when you reconcile the net income and the owner's equity and you put it on the balance sheet under retained earnings. So it's like kind of that same idea. We've changed our net positions in each of these areas. Here's what we spent, here's what came in, and now we're going to move this over to our statement of net position or balance sheet, right? So it's kind of that similar idea of, they're not called retained earnings because that's not what they are. They weren't earnings to begin with, but it's kind of that same idea, how you're reconciling the income statement and this to the balance sheet through the retained earnings. So they do reconcile, and we'll look at that, of course. So you have those two main government-wide statements that take in all the components of the fund activities. So to get the numbers for those government-wide statements, we use separate fund-based statements. So what I'm going to do is stop right here, and we'll come back and talk about the